Welcome, everybody, to the Real Estate Note Show. I'm Dave Putz from JKP Holdings. Alongside me, as always, Mr. Nathan Turner.
Hello, hello.
Hello. Today, we're diving into the idea of originating and buying commercial notes.
Yeah.
And before we get there, let's just catch up for a minute. For those who may not know us, we're both note buyers, per se. And for us, our experience in this note business has been vast on the buying side of real estate notes originating from banks and whatnot. So, Nathan, what would you say is big difference between buying the bank originated notes and getting involved in this commercial seller finance notes? What are the biggest differences you're finding we've found in the last year plus?
So, yeah, like you say, we've been buying bank notes forever. And then now we've kind of transitioned a little bit, I want to say, over to seller finance. I think one of the biggest differences is just the paperwork. The bank stuff generally is pretty clean. There may be some missing assignments. And actually, that's another difference now that I think about it. But there might be some missing collateral, there might be some missing documents, but the paperwork itself is really clean. And with the seller finance, first of all, my experience has been there might be one assignment in between there. So way fewer assignments to be tracking, which is a pretty big deal. You and I both have our share of chasing collateral. But generally the paperwork's maybe not quite as clean. It takes a little bit more scrutiny when you're going through those documents just to make sure it's what we think it is.
Absolutely. And I think for us, we got used to one set of things happening, and we've shifted throughout the years from that typical bank note, clean cut, just dealing with allonges and assignments to understanding what this whole world of owner finances and originations are. So we're better buyers of that same paper.
Right. Yeah. And it's been interesting, my history where I started doing seller finance, and my paper was just as ugly, if not uglier, than some of the stuff we're seeing.
Yeah, true.
Where I didn't know what I was doing. I was writing up a contract to the best of my knowledge and ability, but it wasn't correct. And as I learned more and as I experienced more, I got cleaner and better, and now I'm satisfied where it's at. And so it's kind of interesting going back to that now and seeing some of that same kind of paper coming through.
Yeah, and I'm going to share with everyone in the comments on here, and I'll share it on the YouTube channel when this is being recorded. This will be on our podcast as well as our YouTube channel. Nathan and I run a awesome class for those who are originating paper, who want to be interested in selling it to note buyers. And we teach those originators what makes a note valuable and what criteria note buyers are looking for. So you guys do make quality notes to sell if you choose to or need to in the future.
And I honestly, I think we're making an impact from all the people we've been speaking to.
Yeah,
I'm seeing that. I actually talked to a guy that's creating notes out in North Carolina, and when I met him a year ago, he's like Armelo, and now he is going through an Armelo, and he's kind of cleaned up on the origination side what he's building, and it makes it much more attractive for note buyers.
Absolutely. So we definitely encourage you guys, if you are originating it, please jump in. I post a link to our the website, which will get you into Zoom calls and whatnot. We're having one Wednesday night, which we'll be talking about. Also, before we dive into our awesome guests we have going on today, Nathan, share with those who may not know us about this conference that's coming up in May.
Yeah. Oh man, the closer it gets, the more excited I get.
I know.
And I know we're still a few months out, but man, it's going to be so good. We're just looking over kind of a preliminary schedule of speakers. And man, it's going to be really good. I've got you lined up. Yeah. I've got me lined up. I've got a bunch of people that we know. I won't spill the beans too early, but we've got some really great speakers coming up, as well as
and this is for those
really
who are
fun things.
Buying notes as well as originating, putting them both in the same room.
Exactly.
And I think that, besides the speakers, is probably the second awesomest thing, that people who are originating are going to be able to have people who they look up to speaking on stage.
Absolutely.
We found, weirdly enough, that those people who are doing rap notes, originating notes, don't have a conference.
Right.
You can join
Right.
in and take a look at it as well as meet other note buyers who right at your same table could be buying your notes.
Yeah, and
Amazing.
just looking over, like, really it's almost 50-50, where it's kind of the traditional what we're used to and seller finance. And so we're incorporating a lot of that coming in, a lot of speakers, a lot of originators that are actually doing this, that all walks can relate to. So whether you're originating paper, or you're buying property and selling it on terms, creative finance,
Mm,
whatever, we've got that covered, and people that can speak to that, as well as the note buyers. And man, oh man, we're going to make a lot of business coming together. It's exciting.
yeah. The last year's we had a couple deals actually happen that weekend, which most conferences that never happen. So excited about that.
Perfect. Yeah.
So
So
yeah.
if people don't know, it's the Diversified Mortgage Expo, and it's coming up May 31st, June 1st in Nashville. And yeah,
Yeah, buddy.
cannot wait to see everybody. It's going to be a really great
Uh,
conference.
it'd be great. So those who haven't signed up for it, please go to the website and you'll find it. If you can't find it, have problems, feel free to reach out to us to learn more. So when we get back to the idea of originating, buying commercial notes, we're going to cover today the idea of what is a commercial note? What does it mean to originate it? What's the differences? How do you find it? How do
Mm-hmm.
you possibly, if you're looking to buy it, stuff like that. And in the next couple of weeks, we'll be talking to more people who are doing this stuff. I mean, today we're just going to talk about the overall line of what is this stuff? How do you originate it correctly? What do you do to make it safe? Nathan, I'm sure you've seen paper that's not written well and not originated
Sure
well.
have.
What could, what are some of the things you know of that could happen if you don't create good paper?
Well, number one, you may not be able to sell it at all. And then if you
Mm,
can sell it, it's not going to be for a great price. So just there are some really simple ways to structure your note in the first place to make sure it's a very marketable note. And I know a lot of people get into notes where they're originating and their plan is just to hang on to the note forever. Great. What if what if 2, 3, 5 years down the road you do decide you want to sell it, you would like a lump sum of cash? Wouldn't it be nice to have that note structured in a way so that you can get top dollar for it? So that's really what we're coming down to, and we're hoping that people get that message.
absolutely. And I just to remind everyone, this will be recorded. I think you got a comment about that. We do run this show every other Friday. So we'll be back in about 2 weeks. So if you are interested, we'll be talking to another note guy who's been in the space for a long time. So without further ado, let's bring on our guest. Paolo, welcome to our show. We are excited to have you on.
Thank you for inviting me.
Awesome. Can you share a little bit about your background? How'd you get involved in real estate? How'd you go towards this idea of commercial properties? What does it look like? How'd you get started? How'd you get introduced to this space?
Well, I mean, I've been in real estate forever. I'm actually from Italy. I moved to the US around 12 years ago, and I did real estate in Italy. And when we came here, initially I invested in rental properties while working my corporate job.
Mhm.
And I just back then, when I came here, cap rates were really good. You could buy for really little a very good rental property, and I used the build a portfolio of 32 rentals. And then as prices didn't make more sense because prices went up so much, I decided to start lending, and I did a big cash out refi and started this company. And as I lent, I realized that you could make a lot more profit with a more secure when you rent a fix and flips rather than a normal home, because people need it for a shorter amount of time, so they're okay with a much higher rate. And it started working really well, so I kept growing the business.
Awesome.
Interesting. So when
And
we're talking
I
about commercial, this you're going to help us dispel a myth right away here. So when we're talking about commercial notes, we're always talking about strip malls and office space and things like that, right?
Hotels, like massive stuff,
Hotels.
right?
no, not necessarily at all. Actually, the vast majority of my notes so far have been on houses or small multifamily that have But the reason why they're commercial is because you're not lending to an individual, you're lending typically to an LLC, but you're lending to a corporation, which has a lot more advantages. And the first advantage is that legally you don't have the same requirements as a lender. There's a much, much lower protection for an LLC. This is actually, we decided to really lend in Georgia, as we know the market extremely well, you have really basically no protection as a borrower. If you're an LLC, the law considers a commercial loan, a commercial contract between two entities, and is not particularly protecting one versus the other. So the legislation is not looking at a poor individual with a corporation, is looking at two companies making a contract together. So it doesn't really favor one versus the other. And what you can do, you can still have the person on hook, having them sign a personal guarantee. And you can also, as you know, the worst case scenario is somebody does bankruptcy. But if you do a commercial note, you can have them pledge their shares of their entity on top of the property. So you can take over the entity if they try to bankrupt it. So you have, you effectively can take the property very quickly at a crazy speed with this system. The second great advantage is equity. When someone buys a property, they typically either they have a regular mortgage with a little down payment, or you create a seller financing where they can't put as much money down as instead of real estate investors. Most of our investors have six figures cash bank account in order to, and they have a sizable down payment they need to put down, and they have to have cash reserves, etc. So you have a much higher profile borrower than your typical borrower that you would have. You have instant equity, as investor will buy for a lower price than market because that's their profession. And on top of this, they need to put a down payment. So you have a lower loan to value, and you typically have a higher rate. You have a lot more remedies than a regular loan.
Very interesting. So are these typically short-term loans, like 12, 18-month kind of things?
Yes.
They're getting 30-year mortgages?
No, because you can flip. They are trying to borrow for really a short period of time, and therefore you have two advantages. Number one, you're going to have a much higher yield. So all the notes are really going to be double digit. And then the second advantage is they're going to be short term. Yes, they're going to be typically 12 to 24 months, which can be for no buyer a bit of a paperwork because you might get paid very quickly. But the nice thing is this allows you not to have all the inflation risk, because now if you get your money back and inflation goes up, you can reset and the rates constantly reset. You can reinvest at whatever is the market rate at the time. So a lot of people have suffered from this past inflation hike, but if you have a note at 12% that matures after a year and maybe gets paid back after 10 months, well, now you've earned that money, and if all of a sudden inflation spikes up a lot, you can now have your next set of notes at a higher rate.
So you mentioned before and about the fact you get double-digit yield numbers, right?
Yes.
I'm going to give you a softball here. How about usury law? I mean, usury law says you can only do a cap of a certain interest rate. Is usury law apply here at all?
It does, but it has a different regulation. So for example, for Georgia, which is mainly what we do, for this type of law, usury law is 60%, 60. So yes, it would be illegal to have an interest rate of 60, but obviously as we do 12, 13, 11, 10, 15, 18, what other interest we do, it's well below usury law. Again, they're just not the same legislation that there is for individuals. You also, regarding legislation, another huge advantage is you don't have to have the same type of licensing. There's not as many requirements for like statements or all these laws that make servicing or originating very complex. And can add additional risks that forces you to be very careful in the space. It's not, you don't have all that red tape on commercial. An example is this number that I gave you.
That's amazing.
I'm curious, like usually when we're looking at a note that we're going to buy, one of the factors we look at is what's the value of the property. And when I'm looking at that, I want to know today's value. So not an after repair. So I think what you're doing is lending more, like I said, to flips. So are you lending on the current value where it has not been repaired, or are you lending on a future value?
So we look at three factors. We look, definitely we look at the future value. So we want to ensure the future value, loan to value. Typically we like less than 75%. And we try to really be conservative and having less than 70%. So now on an as-is value, typically the only way to look at an as-is value on a property to be flipped, they typically need some renovations, and therefore they only bought from investors. So if you try to look at comparable properties, they're all underpriced because they're only properties that are investor based. So they're already discounted. So what you do in that case is we try to be 85% or below. So because there is a margin that an investor will make from buying a distressed property and reselling at retail. So the two ratios are going to be different.
That 75, 70, 85 includes the cost to repair, because you're not going to loan them 85% plus repair costs, right?
No, well, exactly. So what we do is we do not advance all the money to the borrower right away. And we will just advance an initial amount in order to ensure that we have a conservative leverage. And then we'll go and give them the money as they have repaired. We're going to give them the second part of the loan. So for example, if there is a property, for simple numbers, that is worth 100K now, and it's going to be worth 200K once it's done, and we're giving a portion of the loan. Maybe we'll give them 80K now on the loan, and then we'll give them a little more. We might give them another 50K after they've done the renovation.
And how do you manage that renovation? How do you manage that situation where, they finish the roof or they finish a kitchen? Are you going to the house and looking at it? Right?
Well, this is another stream of revenue for us. I have, we do it. That's probably a lot why we're staying here locally, because we have people in the field that will go out and we can charge the customer an additional fee for the person to go out and do a report. So typically what we do, well, in this case, you could think in it two ways, maybe for the audience. One, you can really, if you know construction well and real estate investment well, you can build your own business this way. And now what you have is you have a lot of security, and you have a lot of income, and you do not need to run all the risks of the flippers. That's one way to do it. And if you would ever like to flip houses, you know that if you ever get back the asset, then you can finish it up and make a lot more money, because you're effectively investing in the note a fraction of what the flipper is investing. Another way to do it is, if you buy a note from me or from any of my or other people that do this, typically we'll all service it for you. So you'll get the draw reports, you'll get everything, and this will be completely managed for you.
Wow. And then you're handling all that escrow money. It sounds like, are you servicing all this yourself, or you have outside people helping you manage it?
So I have outside people that work for me managing it. So, we have approximately 80 notes right now on our either on our books or that we have sold, and we're all managing them. So we have field people that will go and give us a draw report with pictures and reconciling the scope of work and the escrow.